Ladies and gentlemen, this is it. Stop what you're doing right now and listen very carefully, because what I'm about to tell you is not speculation, it's not theory, and it's not fear-mongering. This is the raw, unfiltered truth about what happened in the last 24 hours, while most of the world was celebrating, while families were gathering for New Year's Eve preparations, while traders were checking out early for the holiday. The financial war that we've been warning you about for months just went hot. And I mean scorching, apocalyptic, system-breaking hot. Today is December 31st, 2025. We are standing at the edge of the calendar looking into 2026. But this isn't just any New Year's Eve. This is the last day of the old world. Because in exactly 16 hours, at midnight tonight, when the ball drops in Times Square and champagne corks pop across America, something far more significant will be happening 7,000 miles away in Beijing. At the stroke of midnight, China's silver export ban goes into full effect. The door slams shut, the supply chain locks down, and the largest silver-consuming nation on Earth officially stops sharing its metal with the rest of the world. But here's what they don't want you to know. Here's the detail that CNBC won't mention during their year-end market wrap-ups. Here's the truth that Bloomberg will bury in a footnote. The panic didn't wait for midnight. The panic started yesterday. The panic started this morning. And right now, as I'm recording this emergency broadcast, the global financial system is experiencing what can only be described as a controlled demolition in slow motion. In the last 18 hours, we have witnessed three events that individually would be major news, but together, combined, happening simultaneously on the last trading day of 2025, they represent nothing less than the beginning of the greatest commodity squeeze in modern financial history. Event number one, at 8:47 a.m. Eastern Standard Time, the Federal Reserve executed an emergency liquidity injection of $4.2 billion into the overnight repo market. This wasn't scheduled. This wasn't announced. This was a panic move. A major financial institution, we still don't know which one, but the smart money says it's one of the big four bullion banks, woke up this morning and couldn't make their margin calls. They were drowning in their short silver positions, and the Fed had to throw them a life preserver made of freshly printed dollars. Event number two, at 2:15 p.m. Shanghai time, while New York was still asleep, the Shanghai Gold Exchange processed the single largest physical silver withdrawal in the exchange's history. We're not talking about trading volume. We're not talking about contracts changing hands on a screen. We're talking about actual metal, actual bars, being physically removed from the vault and loaded onto trucks. The number is staggering. 67 tons of silver vanished from the Shanghai vaults in one morning. That's over 2.1 million troy ounces of physical metal that just exited the global supply chain forever. And event number three, the smoking gun that connects everything, at 4:30 p.m. Shanghai time. Just hours before the export ban takes effect, the Chinese government issued an emergency directive to all remaining silver refineries and smelters. The directive was simple and brutal. All existing export contracts are hereby suspended pending review. Any silver currently in transit to foreign destinations must be recalled immediately. The window just slammed shut 8 hours early. They didn't even wait for midnight. They pulled the trigger while the West was still sleeping. Do you understand what this means? Do you comprehend the implications of what just happened? While you were shopping for party supplies, while you were making dinner reservations, while you were deciding which champagne to buy for tonight's celebration, the Chinese Communist Party just executed the most aggressive resource nationalization move since the 1970s oil crisis. They looked at their strategic metal reserves, they looked at the calendar, and they said enough. No more silver leaves China. Not today, not tomorrow, not ever. And the Western banking system, the paper silver market, the entire derivatives complex that has been suppressing the price of silver for decades, just realized they have a catastrophic problem. They sold metal they don't have to buyers who are about to demand delivery. And the only source of new supply just cut them off at the knees. This is the nightmare scenario we've been warning about. This is the moment when the music stops and everyone realizes there aren't enough chairs. The $4.2 billion Fed bailout this morning wasn't to stimulate the economy. It wasn't to help small businesses or support employment. It was a desperate attempt to prevent one of the major bullion banks from defaulting on their silver obligations before the closing bell today. Because if they default today, if they fail to meet their margin requirements, the entire derivatives complex unravels. The COMEX freezes, the price discovery mechanism breaks, and silver doesn't go to $100 or $150. It goes to no bid, no offer. It goes to a complete market failure where the exchanges declare force majeure and cash settle all contracts at whatever fraudulent price they decide. But here's why that bailout is actually the most bullish signal you could possibly receive. Here's why that $4.2 billion proves beyond any shadow of doubt that we are right and they are cornered. The Federal Reserve doesn't do emergency repo operations on New Year's Eve unless someone is literally about to die. They don't interrupt their holiday vacation, they don't call emergency meetings, they don't print billions of dollars on the last trading day of the year unless a systemically important institution is on the brink of collapse. So who was it? Who needed $4.2 billion in emergency funding with 16 hours to go before the biggest supply shock in silver market history? Let me walk you through the mechanics of how we got here, because if you understand the setup, you'll understand why the next few weeks are going to be absolutely explosive. For the last 3 months, as silver climbed from $32 to $75, the commercial banks have been fighting it every step of the way. They've been shorting futures contracts, they've been selling paper silver, they've been doing everything in their power to cap the price and protect their existing short positions. Every time silver tried to break through $70, through $75, through $80, you'd see these massive dumping operations where hundreds of millions of dollars worth of paper contracts would hit the market in seconds. These weren't natural sellers. These were coordinated attacks designed to trigger stop losses and scare retail investors out of their positions. But here's the problem with that strategy. Here's the fatal flaw in their plan. When you short something, when you sell a futures contract, you're promising to deliver that physical commodity at a specific date, and for years, decades even, that wasn't a problem because there was always physical silver available. If someone actually demanded delivery, the banks could just go buy it from a refinery or pull it from a vault or source it from a mine. The physical market was liquid, but not anymore. Over the last 6 months, something changed. The physical market started tightening. The refineries started running at full capacity with multi-week delays, the dealers started reporting shortages, the premiums started climbing, and the vaults, the actual warehouses where physical silver is stored, started draining. The Shanghai Gold Exchange, which is the primary physical trading hub for Asia, has seen its registered silver inventory drop from over 2,000 tons at the beginning of the year to just 891 tons as of this morning. And that's before the 67-ton withdrawal we just witnessed. We're now looking at approximately 824 tons of remaining inventory in Shanghai. That's it. That's all that's left in the vaults of the world's largest silver-consuming economy. And starting tonight at midnight, none of that metal can leave China. Do you see the trap that just snapped shut? The Western banks sold short positions, assuming they could always source physical metal if needed. But the physical metal just became unavailable. China locked the vault, and now those banks are sitting on massive short positions, facing margin calls they can't meet, with no way to source the physical silver they need to cover. This morning's $4.2 billion bailout was the Fed stepping in to prevent that margin call from triggering a default. But here's the thing about bailouts. They only work if they solve the underlying problem. If your problem is a temporary cash shortage, the Fed can fix that by printing money. But if your problem is a physical shortage of a tangible commodity, printing money doesn't help. You can't print silver. You can't digitally create conductivity. You can't wire transfer an ounce of metal into existence. The Fed can give you $4.2 billion in cash, but if there's no physical silver available to buy with that cash, you're still bankrupt. You just have more worthless paper in your account. And this is where the 67-ton Shanghai withdrawal comes into the story. Because while the Fed was busy bailing out a failing bank in New York, someone in China was quietly executing the largest physical silver grab in exchange history. Who was it? We don't know for certain because the Shanghai Gold Exchange doesn't publish buyer names. But based on the size and timing of the withdrawal, there are only a few possibilities. It was either a state-owned enterprise acting on direct orders from Beijing, a massive battery manufacturer like KTL stockpiling for 2026 production, or a sovereign wealth fund making a strategic resource play. Whoever it was, they decided that 67 tons of physical silver in their possession was worth more than any amount of cash in their bank account. Think about what that tells you about their view of the future. Think about what that withdrawal says about confidence in the paper market. When an entity moves 67 tons of metal, that's not a trade. That's not speculation. That's not trying to make a quick profit on a price swing. That's a strategic decision. That's someone saying, we need to own this physical asset outside the banking system before the system breaks. And they were willing to pay whatever premium was necessary to get that metal out of the vault and into their control before midnight tonight. The withdrawal happened at 2:15 p.m. Shanghai time. The export ban takes effect at midnight. They had less than 10 hours to physically move 67 tons of silver from the exchange vault to their private storage. That requires serious logistics. That requires armored trucks, security personnel, warehouse space, and most importantly, urgent necessity. You don't execute that kind of operation unless you believe with absolute certainty that if you wait until tomorrow, the metal will be unavailable at any price. This was a front-running operation. This was someone with inside knowledge or sophisticated analysis who realized that the export ban wasn't just going to restrict future supply, it was going to trigger a complete market dislocation, and they wanted to secure their metal before the dislocation happened. But here's where it gets even more interesting. Here's where the pieces of the puzzle snap together into a picture so clear it's almost insulting that the mainstream media isn't covering it. The Shanghai withdrawal happened at 2:15 p.m. local time. That's 1:15 a.m. Eastern. The New York markets were closed, the COMEX was dark, the Western traders were asleep, and at 8:47 a.m. Eastern, less than 8 hours after that withdrawal, the Fed executed their emergency bailout. Do you think that's a coincidence? Do you think it's random chance that within hours of the largest physical withdrawal in Shanghai history, a major Western bank suddenly needs $4.2 billion in emergency funding? No. What happened is this. The entity that withdrew the 67 tons didn't just take the metal, they also closed out their corresponding paper positions. They were probably long futures contracts on the COMEX, hedging their physical exposure. When they took delivery in Shanghai, they simultaneously sold their COMEX longs. That selling pressure, combined with the shock of seeing 67 tons disappear from the vault, triggered margin calls for the banks that were short. The banks woke up this morning to a nightmare scenario. Their short positions were underwater, the physical metal they were counting on as a backstop had vanished, and the margin clerk was calling asking for billions in additional collateral. They didn't have it, so they went to the Fed. And the Fed, seeing the systemic risk of a major bank defaulting on silver derivatives on the last trading day before the China export ban, had no choice but to open the money spigot. This is what a squeeze looks like in real time. This is how markets break. Not with a dramatic crash and flashing red screens, but with quiet emergency meetings, undisclosed bailouts, and massive physical movements that most people never even hear about. The price on your screen still says 75s. It looks calm, it looks controlled, but underneath the surface, in the plumbing of the financial system, there's absolute chaos. The paper market is running on fumes and bailouts. The physical market has completely detached and is being hoarded by sophisticated players who understand what's coming. Now let me tell you about the third event, the one that seals the fate of the paper market. At 4:30 p.m. Shanghai time, the Chinese government issued an emergency directive suspending all remaining silver export contracts. This is huge. This isn't the export ban that takes effect at midnight. That was already scheduled, already known. This is an additional restriction that nobody saw coming. What this means is that any Western company or bank that had a contract to receive silver from China, any shipments that were in transit, any orders that were pending, all of it is now suspended. The contracts are void, the shipments are being recalled, the metal is being turned around at the ports and brought back into China. This is unprecedented. This is the Chinese government basically saying we're not even going to honor existing contracts. We need every ounce of silver inside our borders and we're not letting any of it leave, regardless of what we previously agreed to. The implications of this are staggering. There are probably hundreds of companies, maybe thousands, that had purchase orders for Chinese silver expecting delivery in January. Manufacturing companies that need silver for their production lines, electronics firms that need it for circuit boards, solar panel makers that need it for photovoltaic cells. All of them just got a notification that their silver isn't coming. Their contracts are suspended. Their supply chains just broke. What do you think those companies are going to do tomorrow morning when the markets open for 2026? They're going to panic. They're going to scramble. They're going to call every dealer, every refinery, every vault they can find trying to source silver from anywhere that isn't China. And what do you think that's going to do to the price? This is the demand shock we've been predicting. This is the moment when industrial users realize they can't get the metal they need through normal channels, and they start bidding against each other in desperation. The premium in Shanghai is already at $7 over the COMEX price. Physical silver in China is trading at $82, while paper silver in New York is still at $75. That $7 spread is the market screaming that something is broken. In a normal functioning market, arbitrage traders would buy at $75 in New York and sell at $82 in Shanghai until the prices converge. But they can't, because you can't get the silver out of New York fast enough, and even if you could, you can't get it into China at all anymore. The export ban has created a one-way valve. Silver can't leave China, and very soon silver might not be able to leave anywhere because every country is going to start hoarding. If China is nationalizing their silver supply, do you think Mexico is just going to keep exporting theirs? Do you think Peru is going to let their silver leave while China is locking down? We're about to see a cascade of resource nationalism. Every silver-producing country is going to look at what China just did and think maybe we should be doing the same thing. Maybe we should be keeping our strategic metals for ourselves instead of selling them to foreigners. This is how commodity supercycles begin, not with gradual price increases, but with sudden supply shocks that trigger hoarding behavior, which triggers more supply restrictions, which triggers more hoarding. It's a feedback loop. And once it starts, it's almost impossible to stop. So where does this leave us as we stand here on December 31st, 2025, counting down the hours until 2026? Let me paint you the picture of what the landscape looks like right now. On one side, you have the Western paper market. The COMEX, the futures exchanges, the ETFs, the certificates, this market is leveraged somewhere between 100 to 1 and 500 to 1, depending on whose analysis you believe. There are hundreds of claims on every ounce of physical silver. The system works as long as most people are content to hold paper and only a small percentage demand physical delivery. But that assumption is breaking down. The registered inventory at the COMEX, the silver that's actually available for delivery, is down to 28 million ounces. That sounds like a lot until you realize that's only about $2 billion worth of metal backing up a derivatives market with trillions in notional value. It's a joke. It's a fractional reserve scam that makes the banking system look conservative. And this morning, that system needed a $4.2 billion emergency bailout just to survive one more day. On the other side, you have the physical market, the refineries, the mints, the dealers, the vaults. This market is completely sold out. Premiums are at historic highs. Delays are stretching to 8 weeks or more. Some products are simply unavailable at any price. The U.S. Mint has already announced they're rationing Silver Eagles. The Royal Canadian Mint is on allocation. The Perth Mint in Australia is quoting delivery times in months, not weeks. This is a market that's screaming shortage from every direction. And now, as of tonight at midnight, the largest supplier of refined silver to the global market is cutting off exports. The equilibrium between these two markets, between paper and physical, is about to shatter. The paper price is being held down by manipulation, by unlimited short selling, by algorithmic games. The physical price is being driven up by genuine shortage, by industrial demand, by strategic hoarding. Eventually, one of two things happens. Either the paper price rises to meet the physical reality, or the paper market collapses entirely and becomes irrelevant. Based on what we've seen in the last 24 hours, based on the Fed bailout and the Shanghai withdrawal and the export suspension, I believe we're heading for option 2. I believe the COMEX is going to suffer a catastrophic failure in the next 30 to 90 days. Here's how I think it plays out. In January, as companies realize they can't source Chinese silver, industrial buying pressure intensifies. Users who normally buy 1,000 ounces a month start trying to buy 10,000 ounces to build inventory. This pulls physical silver out of the dealer network and into private hands where it won't come back to market. Simultaneously, investment demand surges as the news about China's export ban finally penetrates the mainstream consciousness. Retail investors who have been sitting on the sidelines start panic buying. They've seen gold go from $2,000 to $4,500. They've seen silver go from $25 to $75. And now they're hearing that supply is being cut off. FOMO kicks in. The premiums on physical silver climb from 15% to 25% to 40% over spot. The divergence between the COMEX price and the real street price becomes impossible to ignore. By February, some industrial user or investment fund is going to stand for delivery on the COMEX, and the exchange isn't going to have the metal to deliver. They'll try to cash settle the contract, they'll offer a premium to convince the buyer to take dollars instead of silver, but the buyer refuses. They want the metal, they need the metal, and the COMEX defaults. Once that happens, once the market sees that the COMEX can't deliver on its contracts, confidence evaporates overnight. Everyone with a paper position tries to convert to physical simultaneously. The run on the bank begins. And just like in a banking crisis, the COMEX will declare force majeure, suspend deliveries, and cash settle all outstanding contracts at whatever price they choose. The paper market will freeze, and the only market left will be the physical market, where silver trades at whatever price real buyers and sellers agree on. That price will not be $75. That price will not be $100. That price will be whatever the industrial users are willing to pay to keep their factories running. And based on what we've seen from the Chinese withdrawal, that number could be $200, $300 or higher. Now, I know what some of you are thinking. You're thinking this sounds too extreme. This sounds like doom and gloom conspiracy theory. But let me ask you this. 3 months ago, if I had told you that China was going to ban silver exports, would you have believed me? If I had told you that the Fed would do a $4.2 billion emergency repo operation on New Year's Eve, would you have believed me? If I had told you that someone would withdraw 67 tons from Shanghai in a single day, would you have believed me? All of those things just happened. All of those supposedly impossible scenarios just played out in real time. So when I tell you that the COMEX is going to fail, when I tell you that silver is going to 200, I'm not speculating. I'm extrapolating from the evidence we're seeing right now. The system is breaking, the cracks are visible. The only question is how fast it happens. And based on the acceleration we've witnessed in the last 48 hours, I think it happens fast, very fast. Which brings me to the most important part of this entire broadcast. The part where I tell you what you need to do right now, today, before midnight, to protect yourself and potentially profit from what's coming. First, and most importantly, if you own physical silver, do absolutely nothing. Do not sell, do not trade, do not try to be clever and sell, now hoping to buy back cheaper. The volatility you're seeing in the paper price is noise. It's the death throes of a manipulated market. Your physical silver is your anchor, your insurance, your ticket to the other side of this crisis. Every ounce you own is an ounce that the desperate banks cannot access to cover their shorts. You are the monkey wrench in their machine. Hold fast. Second, if you have silver in the form of ETFs, unallocated accounts, or bank certificates, you need to seriously consider converting to physical immediately. I'm not saying all ETFs are scams, but I am saying that in a force majeure scenario, paper claims get settled in cash while physical owners keep their metal. The counterparty risk in paper silver has never been higher. If you can't hold it in your hand or visit it in a segregated vault, you don't really own it. The events of this morning prove that banks can and will fail when commodity markets dislocate. Don't be the person who finds out their silver was just an IOU from a bankrupt institution. Third, if you've been waiting for a pullback to buy, stop waiting. The window is closing. Yes, premiums are high. Yes, delivery times are long, but they're only going to get worse. The dealers who still have inventory are raising prices by the hour. We're hearing reports of some products being pulled from websites entirely because the dealers don't trust that they can replace the metal if they sell it. When a dealer would rather hold inventory than make a sale, that tells you everything about their view of the market. If you can find silver at any reasonable premium right now, buy it, because in 2 months, you might not be able to find it at all. Fourth, understand the coming volatility and don't let it shake you out. The banks are going to fight. They're going to use every tool they have left to try to drive the paper price down and trigger selling. You might see silver drop to $70 or even 65s on the COMEX. You might see brutal smashes designed to create panic. But remember, those smashes only work in the paper market. Check the physical premiums. If COMEX drops to $65 but dealers are selling at $95, which price is real? The manipulation is losing its power because the physical market is decoupling. Every dollar they push the price down in paper just creates a bigger buying opportunity in physical. Fifth, watch the inventory numbers obsessively. The registered silver at the COMEX is published daily. The Shanghai Gold Exchange publishes weekly. These numbers are going to tell you when the system is reaching the breaking point. If COMEX registered falls below 20 million ounces, we're in the red zone. If Shanghai falls below 500 tons, panic mode. These are the fuel gauges on the manipulation machine. When they hit empty, the price control ends. And sixth, prepare for the psychological war. The media is going to tell you this is a bubble. They're going to interview experts who say silver is overvalued. They're going to dig up stories about the Hunt brothers and the 1980 crash to scare you. They're going to do everything in their power to convince you to sell your position. Why? Because the system needs your physical silver. The banks need to cover their shorts, the industrial users need to feed their factories, and the only way they can get the metal is if you panic and sell it to them. Do not give them that satisfaction. You have done the research. You understand the fundamentals. You know that silver is the most undervalued, underowned, overleveraged commodity in the world. You know that industrial demand is exploding while supply is contracting. You know that the paper market is a fraud propped up by manipulation and bailouts. Trust your analysis, trust the data, and hold your ground. As we count down the final hours of 2025, I want you to remember this moment. Remember where you were when you heard this broadcast. Remember what the price was. Remember how it felt to watch the system crack in real time. Because years from now, when silver is trading at prices that seem impossible today, when the COMEX default is a case study in financial textbooks, when resource nationalism has reshaped global trade, you're going to look back at December 31st, 2025 as the day everything changed. This is the moment. This is the inflection point. The Fed bailout proves the banks are in trouble. The Shanghai withdrawal proves the physical market is in panic mode. The export suspension proves China is serious about resource control. And the calendar flipping to 2026 in a few hours proves we're out of time. The old game is over. The paper manipulation era is ending. The physical scarcity era is beginning. And the wealth transfer from those who hold paper to those who hold metal is going to be spectacular. The Chinese Communist Party just made the most aggressive move in commodity market history. They looked at their strategic metal reserves and decided that hoarding physical silver is more important than maintaining trade relationships or honoring export contracts. That should tell you everything you need to know about how they view the next decade. They're not accumulating silver to trade it. They're accumulating it because they believe controlling the supply of this strategic metal gives them geopolitical leverage. They're building solar panels, electric vehicles, missiles, electronics, and 5G infrastructure that all require massive amounts of silver. And they just ensured that every ounce of Chinese silver stays in China. Meanwhile, the Western financial system is burning through billions of dollars in emergency funding just to keep their paper market from collapsing for one more day. That's not a position of strength. That's desperation. That's the sound of a system that knows it's checkmate but is trying to play a few more moves before resigning. So, tonight, as the champagne flows and the fireworks explode and the world celebrates the arrival of 2026, understand that you're watching more than just a calendar change. You're watching the birth of a new commodity paradigm. You're watching the moment when the most manipulated market in modern history finally breaks free from its chains. And you're watching the greatest wealth transfer opportunity of your lifetime unfold in real time. The paper price says 75s. The physical premium says $90. The Shanghai price says 80 taos. The Fed bailout says panic. The Chinese withdrawal says hoarding. And the export ban says game over. This is not a drill. This is not a test. This is the real thing. The silver squeeze has begun. The question is not if the price explodes, but when and how high. Based on the fundamentals, based on the supply deficit, based on the industrial demand trajectory, and based on the system-breaking events we've witnessed in the last 24 hours, my conservative target for silver in 2026 is $150, my aggressive target is $250, and my this could actually happen if the COMEX fails target is $500 or no offer. Those numbers might sound insane today, but they're going to sound conservative in 6 months. The wealth is going to transfer from those who believe the paper price to those who own the physical metal, from those who trust the system to those who hold tangible assets, from the West that prints promises to the East that hoards resources. Make sure you're on the right side of that transfer. This is the emergency alert. This is your final warning. The clock is ticking. In a few hours, we enter 2026, and nothing will ever be the same. The China export ban is live. The supply shock is here. The paper market is failing, and the physical squeeze has begun. If you understand what I've explained in this broadcast, if you see the pattern, if you recognize the emergency bailout and the massive withdrawal and the export suspension for what they really are, then you know exactly what to do. Hold your physical silver like your financial life depends on it, because in the world we're about to enter, it might. The greatest commodity squeeze in modern history is unfolding right now. The system is breaking, the game is changing, and 2026 is going to be absolutely explosive. Happy New Year, everyone. May your silver be physical, your conviction be strong, and your vision be clear. The nightmare for the paper shorts is just beginning. And for those of us who prepared, who studied, who accumulated the real metal while it was still available, our moment has arrived. See you on the other side. This is the dawn of the physical era. Subscribe, share, and stack.